Hi, it's Adam Hewison. I'm coming to you live from the digital studios of MarketClub. It's Wednesday, the 6th of April, and boy, do we have some big markets. I'm actually looking at my MarketClub's 1 p.m. market update, which are all the stocks and all the markets are right here. So let me just close this up so it'll give me more screen room for you to see this. And you'll see that we're looking at the number one inflation indicator we track. We're looking at the energy markets, the metals markets, the dollar, which actually hit an all-time low against the Australian dollar, and also we're looking at the indices. These are huge markets, lots going on, lots to cover, so let's get started. Let's start off with the inflation indicator we talked about, and it's top of the list. This is the Reuters Jeffries CRB index. It used to be just called the CRB index at one time, and you can see it's a plus 90. On our score, it's down a little bit today, but that doesn't detract from what it's been doing. So let's look at a chart very quickly. As you can see, this is where resistance is, right around the 365 level. We're 362.90 right now. A little bit of profit taking coming into this market, but the highest close in this indicator was July 2nd at 473. That's around 2008. So lots going on. This is the number one indicator we look for inflation. Of course, the government says there's no inflation. Well, that's just absolutely bull right now. So let's go back to our other markets. We're going to look at the energy markets, which have been very strong. And for that, we're going to look at either crude oil or the USO. The USO is the number one ETF for you to trade, and you can see it's up today. So is the crude oil. So let's just look. We got a plus 90, meaning there's a good trend going there. And we'll just look at the chart very quickly. We've been very bullish on oil. Our trade triangles, if you look at our trade triangles, and this is what I want to show you, we're long from 37.15 basis on monthly trade triangles. This is, we don't make this up. This is where it is. You can see we're in new high territory in this particular ETF, and it looks as though we want to see this market go higher. Probably, I'm guessing somewhere around the 47 level. I still think we have some air to go on the upside in crude oil and in the ETF. So that is looking very good in our opinion. Some tight markets here. We need a little bit more strength to get this market going up, but the trend is definitely up, plus 90. Stay in tune with that and use tight money management stops. One of the things you can do with MarketClub, which is really cool, is our talking chart technology, and I'll show you how that works in just a second. And it's very simple to use. All you have to do is just click on the button here. And we should be playing. Well, for some reason we're not having any sound here. There's technical difficulties. So, no worries. We'll try that a little later on. But let's go look at our next market, which is going to be the metal market. We were very bullish. We've been bullish all week on gold and silver. And as you can see, gold, record high price, $1,462 for 1 ounce. And one of the reasons that's happening is because the dollar is getting killed in the markets, the overseas markets. And gold is going up because of that. And also silver, which is trading the best levels we've seen in about 30 years, 31 years. So let's look at the gold chart. Plus 90, still a very strong trend. And you can see the trend is clearly new highs. This is what we looked at yesterday, and I'll just draw something on the screen because I want to show you this. And put my drawing tool on and take that down here. Actually, we'll put it up there. And this is what we drew last week, was basically just last week, I should say, just right here. This is the breakout point. So right around the 1450 level, I think we'll find support, and also down to 1445. But this is just a big area that this market can move up to, and we predicted it would go to $1,500 on this swing. Still very bullish on this market. We expect to see this market move higher. Again, all our trade triangles are all long. 1430, 1444, 1429. Now we always use our dailies for short-term trading. So we're long from 1429. This is a signal we gave you on our blog. Obviously the market at 1455 is a nice profit, about $26 in this market, and we are looking for more. So trade with tight stops, and we're looking for this market to go higher. So let's take everything off the screen, clean that up, and clear everything off. And let's go to our next market, and that's going to be the Aussie dollar. This is what I want to show you. Just unbelievable what's going on here with this market. So here's the Aussie dollar, all-time high, 104.50 plus 100, and you can see, but look at this is what I want to show you. We're long from 92.20, so you can see the number of pips we have in this, and this is not something we just sort of guess at. It is scientifically done using our trade triangle technology, and you can see our last buy signal was here at 101.99. The market's 104.21. So again, we don't guess. The trade triangles tell you what to do in these markets, and they're enormously useful. We only have to look at a quick glance at our scores, plus 90, plus 90, 100, minus 100. What is that? Well, let's take a look at that market. And of course, that's the dollar index. It's 75.55 right now on the dollar index. Now, if we trade and close below 75.40, that will be a new low close for this market. It takes out these lows. So 75.40 is the level we're looking at. All of our indicators, you can see right here, 81.45 short, 76.94 short, 75.69 short. Everything is in the plus column. It's a minus 100, indicating the trend in this market is clearly down, and we expect that trend to continue. We've got much more to show you. We're going to look at the stocks in just a second. So let's go there now and look what the stock market's doing. Now, as you remember, I'm not going to look at the Dow Jones 30 because it's only 30 stocks. I want to look at the bigger markets, whether the NASDAQ or the S&P 500. We have time to look at both of them. Let's look at both of them right now. We're plus 90. And this is one of my concerns that I'm having with this market, and I'll show you the reason why. And I just want to get this, draw this on this tool on here, and you can see right that we are looking at this area here. This is definitely resistance. We pointed this out yesterday. We obviously opened higher today, which you can see the red bar, which means we opened here, and we're currently trading right around this level here. Now, if we go below and close lower than this day, yesterday, which the low was 2,785, I would say this market is going to be an outside negative day, a negative engulfing line. This is a very strong term in Japanese terms, and it would indicate that we probably put a top in, at least for the moment. The other thing that concerns me, and I'll show you what that is the overbought condition that this market is in. And you're seeing, I'm going to scroll this down so you'll see, we've made new highs, yet the momentum has not made new highs. It's actually rolling over. This is another big negative in my mind for this market. But nonetheless, we're plus 100, and you want to use tight stops on this market. One of those stops you could use potentially is a parabolic stop, and I'll show you how to use that. So you could go to our indicators right here, parabolic. And the nice thing about our parabolic, it gives you the option of moving and making it custom to you. So you can tighten up your stops. And in this case, you're looking at a stop here at 276.7. So it's not that far, about 20 points on this particular market. But let's go back to our next and last market for the day, and that's going to be the S&P 500 cash. That's on the defensive right now. It's just down, almost flat for the day, plus 90. But let's look at the chart, and here's the same thing. We're in this zone that's going to be a problem, which we talked about earlier this week in our updates, and the zone is right here. And it's really acting as resistance. Look at how 1, 2, 3, 4 days, and the market's really being unable to do anything. If we go below the low of this day, 1,330, this market's going to be on the defensive. Certainly going below that level will be a negative engulfing line in the markets. You can see our stop would be, if we're short, if we're long, we can move the stop up to 1,323 to protect profits, and I think you'll be in good shape. Hey, this is Adam Hewison with the 1 o'clock update from Market Club. Thanks for stopping by every 6